This is the Weekly Wrap with Kerry, Lutz, and Andros. For more information, go to kerrylutz.com or tedbits.com. Andros is here to explain a number of significant economic and political events around the globe that are having and will have a profound effect upon your wealth. Ty, welcome back. It's another wrap. It's another week gone by. What's going on out there?
Oh, all sorts of things. The whole week's been full of all sorts of hijinks, highs and lows, and but a lot of significant things are happening, and we're going to cover them today. Thank you for having me.
Always a pleasure. And if you don't understand what's going on and who the players are and why they're doing this, then you need to listen to Ty and his analysis, because it really puts things in perspective and gives you an insight that you're not going to find on your mainstream media financial news show or your mainstream media financial website, because what's going on now is cataclysmic. It will shake you to the marrow, and you need to be prepared. And on that intro, Ty, am I exaggerating or...
Well, I think you're being very accurate, but I'm also going to add one other line, in that it's the greatest opportunity in history.
Yes, if you realize it, if you are prepared, and if you are willing to act and put your fear aside, right?
Put your fear aside and understand that the things that have worked for 30 or 40 years are no longer going to work. And going forward, you need to understand how to apply Austrian economics, how to preserve your wealth, and wait for the big opportunities. And that's a mouthful, and it's very difficult to do. But I've spent a lot of time figuring out what needs to be done, and I invite listeners, if they are looking for help with their investments, to give me a call.
And, I say this because people view economic debate, economic discussion as somehow being detached from their daily, everyday life. And really, nothing could be further from the truth, because if you have that grasp, especially Austrian economics, there are opportunities in every market that open up because you understand where the money's flowing and what the powers that be are trying to do. You can just be in the right place at the right time and cash in, which is kind of where I feel like I've been for the past 5 years. Is I saw what was happening. I call this the great unraveling. I knew it was happening, and I took proper steps. And at the very least, I haven't lost any money. And some of the things that I've done have turned out incredibly well, better than any investments I ever made in my previous life experience. So it's important that you know that you're not powerless, even though the state would like you to believe that you're powerless. You're not a slave of the dollar. You get to choose.
I would say you're not a slave of the system.
Right, which is the dollar.
Well, it is, because that's I'll call it the core of everything. And this is all unsound money unraveling. But be that as it may, I'm going to jump into Japan a little bit here and just kind of give a quick overview, and we'll go to the next thing. Japan wealth creation has gone in reverse. And for those people out there that don't understand, Japan has got the highest debt to GDP ratio in the world. Their stock market is off 75 or 80% from their 1989 highs. Their bonds yield nothing. Their bond market is 200% of GDP. And, when you run a fiat currency system, one of the things that you can't have happen is the loss of the ability to produce more than you consume and create wealth. Because if you have increasing wealth, at least some people that have taken your promise to pay, also known as a Japanese yen, and they can have a confidence that they're going to at some point get something for their paper. But when you can't produce more than you consume, then the only way to pay those obligations off, yen are just like dollars, they're IOUs, then everything starts truly unraveling. And in Japan's case, it's been blinding. Ever since that tsunami hit last March, one, Japan has completely shut down all of their nuclear reactors, which is 57 of them. And so basically, they have converted from nuclear electrical infrastructure to gas and oil and natural gas. And so that giant sucking sound is yen being shipped offshore for energy supplies. And it has absolutely made Japan in from a net creditor to a debtor. And they don't have the money to roll their bonds, but more than just those exports of wealth and the consuming of wealth, the shortage of electricity has destroyed Japan's manufacturing base. There's rolling blackouts going on. And so many of the manufacturers in Japan, even if they wanted to produce and export, can't, just because they can't keep the lights on. So not only are they exporting tons of wealth just to keep the lights on, they can't keep the lights on enough to produce the wealth and do the exports. And the yen is near all-time highs. So the yen actually buys a lot right now, but how long that'll last is a good question. Of course, we talked several weeks ago, Kerry, and about the $130 billion that they've decided to print. Well, you can look for another announcement of, I call it QE2 very soon, because they just don't have the money. And it's like a bug hitting a windshield, as John Malden likes to call it. And don't think that this is insignificant, because Japan is one of the biggest creditors of the United States. They buy, in fact, they have stepped in to buy and substitute for buying from China that is not taking place, just like the UK has. And of course, they print that money out of thin air, and they buy a bond that's printed out of thin air, and then they call it an asset, but it's nothing other than a liability. So they just are, I'll call it a nuclear, below a black hole event horizon. And there's no getting out of it. And of course, the whole developed world is there, but Japan is accelerating its decline right now, and don't miss it.
Yeah, and then we get to move on to Greece, out of the frying pan and literally into the furnace.
Oh, Greece is just done their debt restructuring, but they only got to 84%, so they've exercised some collective action causes, and which is kind of forcing everybody in. And there's a little game of chicken going on, because 10% of their bonds were issued out of London and are not subject to those clauses. And we've got another group of people, the banksters, the people who wrote all these worthless swaps and took the premiums, but they're voting not to honor their promises to the people that they sold them to. And of course, they can't honor any of the promises. And since there's 750 billion of them, they have been taking home premium, but at the same time not reserving against losses, a la AIG. We're going to see some real hijinks. We're really seeing people redefine what the word is. And, we're really going to be seeing a lot of what I'll call bureaucratic and bankster, double entendres, backflips, trying to deny reality. Of course, that's what politicians do. They think that they can write a little piece of paper and deny Mother Nature, and Mother Nature's not to be denied. And she's lost a few skirmishes along the way, but she's never lost the war, and she's not going to lose it this time.
History shows eventually the laws of nature and the laws of economics reassert themselves, oftentimes with a vengeance, and I doubt that this is going to be any different. But here we have them calling this a restricted default, which somehow is not going to trigger all these insurance contracts. And yet, here we are. If it quacks like a duck, if it walks like a duck and flies like a duck, it's a duck. This is a default, and they're just cheating those people, those entities that bought these insurance policies, aren't they?
That and the smart money, Kerry, as they try to roll the debt that's due this year, there's been some excellent work done by Deutsche Bank, and a lot of it is not rolling. And the European Central Bank is financing through the back door the rolling of that debt as it flees those markets. Some people are staying in the trade, and other ones say, okay, I'm not going to be sitting there when Greece happens in Portugal and Spain and Ireland and everywhere else. So, none of these countries ever made any plans to pay back principal. They've always made plans just to roll it and never have to reserve against losses. And we're going to see some real interesting stuff here on the ECB. I'd like to mention to all the listeners that I have sent Kerry some charts to go with our discussions so that you can see what we're talking about. But really the important thing is that we're now focused on Portugal. And even though they said Greece was the one-off, I promise you Portugal's up next.
Right. And there's no question. They're all insolvent. They're only subsisting on money printing by the ECB. Whether the Germans like it or not, they have to go through the motions. Their leadership is saying they don't like it. But what is their choice? Allow massive defaults, then they have to nationalize the banks, reliquify them, and effectively end the euro. I don't see them doing that. Maybe I'm naive. I just don't see anybody wanting to have a legacy of bringing down the euro and the EU.
They nationalized the banks years ago, Kerry. I'm sure you're fully aware that we've had hundreds and hundreds of bank failures here in the United States. And you don't hear about it over in Europe because the regulatory, I'll call it, they operate in regulatory insolvency. And they just are able to stay open because the regulators won't close them. Yeah. And they just let them get worse and worse. But the complete structural change of European sovereign and corporate bond markets with the LTRO cannot be underestimated, where the European Central Bank and central banks all through there that are taking these bonds as collateral. And I call them bonds, but they're actually bombs.
Yeah,
onto their balance sheets. Those are effectively making everybody into what I'll call subordinated creditors.
Yeah,
and it just is breathtaking, the change. And now we're really waiting for people to wake up and really for it to dawn on them the structural changes that have taken place. They can try to say that they didn't take place, but they have, because your words are one thing, your actions are the other. The actions are the truth. Like a guy that finds his wife in bed with somebody else, and she says, what do you believe?
It's
not what you think, or your lying eyes.
It's not what you think.
It's just like inflation. You go to the grocery store and you pay 30% more for a steak or chicken or beef, and you watch the Federal Reserve say inflation's up 2%, and what do you believe, me or your lying eyes?
Well, that was an interesting thing. You bring up inflation, and Ron Paul addressed that head on with the Ben Bernanke, head of the Federal Reserve Bank, and he said, we all know inflation's not at 2%. It's much higher. Call it 5%. And the Bernanke never addressed that. Did you notice that?
Oh, he addressed it.
He did address it?
He addressed it. Absolutely. He addressed it, and he was holding up a silver dollar, and the Bernanke was completely prepared for that. He was ready, and he threw a couple $1 billion at it, and that was a group in London selling 3 million ounces of silver in 1 minute, which was 31 tons of gold. They sold 225 million ounces of silver, which was $1 billion worth of margin. Of course, position limits don't matter to central banks and treasuries.
Yeah.
And nobody that goes short puts all of their orders in, especially on that size of an order, in 1 minute.
Of course not.
Because if you're going short, you want to sell for the best price possible.
Yeah,
but if you drop it on the market like that, the best price possible is not possible.
No, it's just manipulation. You're just doing it to bring the market down. But I mean, verbally, he never answered what the true inflation rate was, did he?
Do you ever expect him to do that?
No, of course not. I expect subterfuge. I expect exactly what I get. But every now and then, politicians always get into trouble, they say, when they make a gaffe, because the gaffe is usually the truth. And here he was hit with the truth and, like you said, bomb the markets and avoid the issues. And that's really what they did. And it's just kind of interesting, that's all. So,
well, what it does is it allows investors to go out and buy silver and gold at a reduced price, courtesy of the manipulators.
Exactly.
And it just makes the small investor get stronger and stronger at low prices, not high prices.
Right. It's like a rent control department in New York City. There was an article. It's going to the Supreme Court now, the whole rent control statute in New York. And there's very few places in the country where they have rent control. New York City, Westchester County, my home, and I think Santa Monica, California. And that's pretty much it, because everyone knows it's a failure, causes destruction of the housing stock, and bestows unfair benefits on tenants, creates tremendous risks and losses, and it's effectively a taking of the landlord's property for the purpose of the individual, which is supposedly prohibited by the Constitution, but not as it's currently interpreted. So, that's what it reminds me of. You get to buy this gold and this silver, if you can find it, at a tremendously subsidized price, and then eventually the subsidies will be withdrawn because they're not going to be able to do it anymore, because the market will lose all credibility.
No, it creates shortages.
Yeah, creates shortages.
Just like there's a shortage in rentals in New York, because just like any time you have price fixing, the store shelves become bare.
Yeah, exactly.
That's what's happening in New York, and that's why real estate prices are unreasonable, and that's why there's not enough places to rent. And go to Venezuela and ask Comrade Hugo.
Yeah.
He fixed prices a long time ago, but there's nobody that'll sell them for that price because it's a loss.
It turns to a black market. People, socialists, collectivists, just never learn that this is what always happens. There's no choice. It's just the market at work, that when you subsidize the price of something at an artificially low level, you're going to have shortages. And when you subsidize it at too high a price, you're going to have humongous surpluses. That's the way it works with apartments. That's what's going on with the precious metals markets. So anything else we got to cover this week, Ty?
We're really looking at probably some very significant lows in interest rates right here. And how do we know that? Well, it's because of the amount of corporate investment grade bond issuance and the levels that it's going off at. I'm just going to tell you, the biggest people in the world, and that's like IBM and Johnson & Johnson and Disney and Procter & Gamble, are just absolutely flooding the markets. And these guys are masters at picking tops. You can go back over decades and see these people only issuing debt, near market highs and coming in heavily. And of course, when you really look at the return, at the yield on these offerings, it's close to what a U.S. Treasury is. And I put up a couple of charts showing the tremendous amount of bond market issuance that's going on, and it's the highest since 2000. And you can see, I also put up a chart of the U.S. investment grade bonds, which go back to 2000 as well. And as you can see, we're at the lowest prices in history. Of course, we can go to mortgage rates as well, which haven't been seen since the late 50s as well. And there's really not a whole lot of downside. A lot of upside, excuse me. Downside, there's a considerable about it. Anybody buying this stuff is really looking at capital losses over the coming years. A lot of people are looking for interest rates to back up, but I don't believe it. I believe those markets are so heavily medicated and so heavily manipulated that you're not going to be looking at any kind of backup in rates. They're going to be pretty much static here, maybe a correction. But then back to new highs, because you have to understand what Operation Twist is. And I talked about it a little in the last newsletter, but Operation Twist is nothing less than the U.S. rolling $15 trillion worth of debt over a 4-year period at, unbelievably low rates. And it's a can-kicking exercise. It allows them to, lengthen the maturity of the U.S. Treasury portfolio and get it so that, they're insulating themselves from an interest rate shock. But, people are looking for interest rates sometime to normalize. I'm going to say overtly or covertly, they will be manipulated lower. Because any kind of we saw all of Europe come apart last year when the ECB raised rates by 1%. Okay, it was Jean-Claude Trichet that brought the house down back in 2008. They cannot, the financial system and the assets which they're trying to float and hold higher can stand no increase in rates, none, and especially for the biggest players. And some of the biggest players. The next subject I'm really going to go to is Germany, which used to be the king, but now it's wearing serf's clothing. And there's the printing press. Germany has now put up so many guarantees, and they've loaned so much money. The central bank, there's something called Target 2, and it's where they move money from surplus countries to deficit countries. And Germany has been, I'm going to call it, hiding the amount of bad debt they're holding on their books in the footnotes. And those footnotes have been coming to light in the last week on Der Spiegel. They're holding $500 billion worth of bad debt from the pigs.
Huge amount.
And of course, supposedly they're going to get paid. Of course not. Yeah. And I put up a couple of charts to show the divergence really began right back in 2007 and 2008. I'll call it the monetary transfer, and it shows no sign of abating. But it is the seeds of money printing required for Germany. So Germany used to wear king's clothing, but now it's really more dressed like a serf, just like the people they're rescuing. And then I've got some other stuff here, Kerry, the LTRO, where, the European Central Bank's balance sheet is now bigger than the Fed's.
Remarkable.
It's gone from, back in 2011, it was at $1.5 trillion, and now it's at a little bit over $3 trillion. But the Fed's is $3 trillion, so you have to do a conversion on the ECB. Because a euro is about $1.35.
Right.
So it's actually a $4 trillion balance sheet, and they can try to say that this is the last LTRO. I will make a prediction that the LTRO is not going to last through the summer.
Is that right? It's going to be gone that quickly, huh?
It's going to be gone that quickly, because some of it was just rolling debt that was, had a maturity date of maybe 30 to 45 days. And I put up some charts on that as well. And now the maturity date is out 3 years. So the quality of their short-term funding has improved 20-fold. Okay, so that's just another can kicking, but you have to understand that no one's going to roll that bank debt. There's $3 trillion of guaranteed bank debt from 2008 and 2009 that's got to roll over the next 24 months. Well,
that's remarkable.
Three trillion, and they printed a trillion. That doesn't cover it, does it, Kerry?
Not quite. Not quite.
So we really gonna, I would imagine that we'll see an LTRO by the end of the summer, and it's required. If either they do it or they go to the barter system. and I put in a chart here of the post LTRO total assets, the European Bank versus the reserves. And of course, Kerry, this shows them running at 36 to 1. But this is just on balance sheet assets. They have printed other trillions of dollars to substitute for short-term funding. So actually, the liabilities they're carrying are quite a bit bigger than being stated.
Oh, like always, we never really get the true extent. I mean, the Fed loaned out, in quotes, $16 trillion in 2008 to banks all over the world, and I want to know where that money is. How much of it got paid back? How much of it are they using now to simply buy back, to buy treasury debt off the books through whomever, through third parties? Because that's what seems to me is going on.
Oh, it's trillions of dollars. The Fed is running, I can show you a $17 trillion worth of off-balance sheet holdings of the Fed. Okay, I mean, it's there in the numbers if you go search for them.
Absolutely.
And then we have one last thing that really that was really hit us in the face yesterday, and that was the trade deficit. And the trade deficit is now hitting new lows for after the crisis, and it's a technical pattern that is pointing to a 65 or 70 trillion dollar trade deficit. And really, the way that I read it, it'll be here by late summer. Well, you have that. Okay, so the U.S. is hemorrhaging cash, and we had the Treasury deficit data come out for February, and the news isn't good there either. It was the biggest monthly deficit ever in history. It was over $220 trillion. But to put that into perspective, that's about $7.5 trillion a day of deficit that have to be financed. And of course, that great sucking sound you hear is the money coming out of the private sector. It's money that can't be invested in business or anything else. People don't understand that when Obama goes after the people that can fund small businesses, you're going to get less small businesses.
Yeah, there's no question about that.
But $220 trillion a month is such a breathtaking number.
Billion. 220 billion?
20 billion, yeah. And to put that into perspective, the total market cap of the biggest bank in the world, JP Morgan Chase, is 150 billion.
Yeah.
So they could buy JP Morgan Chase and then another big bank or two every month for the amount of money they're wasting. And of course, that money's all going for consumption. None of that money's being used for any kind of investment in wealth creation or business or anything else. It's completely, I'll call it a non-self-liquidating asset. So those are permanent debts on your children and mine. And of course, they're not going to pay them.
Yeah, that's a foregone conclusion.
They're going to repudiate that debt, and so they'll have to print the money.
Yep.
And people worry about gold and silver when it goes down. It's the most despised bull market in the world. But those real metals and that real money, it's kind of reverse Gresham's law. And now the good money is going to push out the bad money.
Yep, no doubt that's what's going to happen. That's why I've been telling people for years, if you can refinance your home and either pull as much cash out as you can and still safely service the debt, or if you can't get anything out but you can lower your rate and you'll have additional cash flow, put it into metals. That's what I call reverse Gresham's law. Anytime you can take paper that's worthless, that people haven't understood yet is worthless, and convert it into gold and silver, which has intrinsic value, do it, because that's reverse Gresham's law, and it's the good money forcing out the bad. Anyway, Ty, we got to wrap up, but it's been a good week's wrap. So much going on and so many things to keep your eye on that just about everybody's head is spinning now. We'll talk to you next week, and have a prosperous week ahead.
Thanks, Kerry, and everybody tune in next week. We're gonna, this.